we didn't really talk about the passive loss rules in chapter, because we didn't cover chapter 13, but there's no passive loss rules with regard to corporations. One of the things, okay, so when you form a company, and this applies actually not just with corporations, but these are startup expenses. So, you know, normally when you first start a corporation, you've got all of these expenses, but you don't have any income yet to offset those expenses. You are still allowed to deduct some of those expenses. So they can immediately deduct organizational expenses, and an organizational expense is anything that, like those articles of incorporation and stuff like that, or anything that you need to organize the company. So you can deduct up to $5,000 of those organizational expenses. However, if the organizational expenses are more than $50,000 in total, then the $5,000 amount is reduced to $0 on a dollar for dollar basis until you get to $55,000. So if you spent $52,000 in organizational expenses, you can deduct $3,000 of those. Does that make sense? So a dollar for dollar up to that. When they exceed $55,000 or any amount over and above that, you amortize those expenses over 180 months. Okay? So these are expenses associated with the organization of putting the organization together. So like attorney fees, those filing fees, that kind of stuff. Startup expenses, you've got the same well, talking about here, I don't know if this has changed or not. So for startup expenses, which are kind of different, those are like, you know, you're buying supplies, you're buying all sorts of stuff to get the organization, to actually get operations up and in order to produce income. So normally if you're generating income, you would deduct those things as ordinary and necessary business expenses. However, you don't have any income yet. So those expenses are not deductible. They have to be capitalized. And again, they're capitalized over a 180-month period. So just like those additional organizational expenses. So I'm wondering if that changed, because I thought the startup expenses were separate and had the same kind of rules. I'll have to look into that. Corporate tax rates, that's pretty easy, 21% on everything. Super simple. We don't have to worry about calculating, so what that is doesn't matter. Here we got Buford Company, taxable income of $1.2 million, tax liability, 21% of that is $252,000. The corporation is required to make estimated payments. There is a safe harbor amount, 100% of the tax due for the year or 100% of the tax due for the prior year. So the estimated payments, again, 4 installments, 15th day of the 4th, 6th, 9th, and 12th months. So again, that would depend upon what their schedule is, what their accounting year end is. And those are reported then on the 11/20 what was paid. Large corporations cannot use the prior year tax safe harbor except for the first quarterly installment payment. So they're going to base the final 3 quarterly payments on their estimate of the current year tax due. There are underpayment penalties as well for underpaying those taxes, those estimates. All right, net operating losses. Different from the capital losses, right? So this is where these are operating, you've generated a loss for your business just from your normal operations, not capital sales. So when the corporate entity has negative taxable income for the year. All right, so this can get a little bit tricky as well because the rules have changed over certain years. So if an NOL, and they're called NOLs, net operating loss, NOL. If an NOL is generated in a tax year beginning on or before December 31st, 2017, so these are the old rules, but if it could be generated, you could still have this NOL sitting out there. It can be carried back 2 years and forward 20 years. So we're still in that 20-year period, obviously. So there could still be NOLs that would be under this regime. The corporation can elect to waive the carryback period and only carry it forward. So they can decide not to go backwards, they can only go forward. And once you make that decision, you have to stick with that. If it was generated, the NOL generated in year 2018, 19, or 20, they can be carried back 5 years and then forward forever and ever. So instead of back 2 and forward 20, if it was generated in 18, 19, or 20, you can go back 5 years and then forward forever. And they can affirmatively elect to waive the carryback period and only carry it forward. These NOLs can offset up to 100% of taxable income in 2020 and before. So if you had, if you used it, you carried back, it could offset up to 100% of that income. But it will offset up to 80% after 2020. So depending upon whether you're going back or forward. NOLs that are generated in 2021 or later are not eligible for carryback. So now there is no carryback, but they can be carried forward indefinitely. They offset up to 80% of taxable income in the carry forward year. So they can't offset 100% of the income. So carryback is first applied to the oldest year, and then the remainder is applied to the second oldest year, just like we did with the capital losses. All right, so here we've got examples, 3 examples. So Wilson Company was formed in 2015, had $10,000 in 2015 of income, $15,000 in 2016. 2017, they had an NOL of $12,000. So in those years, they could go back 2 years and forward 20. If they carried back, the company would have 0 income in 2015, so that's 2 years. So this $12,000 would first absorb $10,000 of the income from 2015, and they would have $2,000 left over, and then the other $2,000 would absorb $15,000. Would absorb, the other $2,000 would absorb $2,000 of the 15, and they'd have $13,000 of income 2016. Fairly simple. If they hadn't changed these rules, it would be fairly simple. But because we've got these different rules, depending upon when the NOL is generated, and by the way, I know you've got homework that has NOLs involved, and you've got to pay attention to the dates, okay? Same information, but they elect to waive the carryback period. Prior to consideration of any NOL, they earned $8,000 in 2018, $21,000 in 2019. They would apply the 2017, remember they had $12,000 NOL in 2017. They would apply the 2017 to the 2018 income, so here's our 2018, so they would absorb all of that, right? So that now they're at 0. And then they would record 0 net income 2018, and they would have $4,000 to carry forward to 2019. So would absorb 4,000 of that 21. They would report income of 17,000. Because they had, so their NOL was, where is it, why am I not seeing this? Okay, oh, it's up here. So they had an NOL of 12,000. And that was in 2017, right? And then 2018, they had $8,000 of income. So we can apply 8,000 of that. And then they're 12,000 minus 8, we've got 4,000 left over, NOL, which 2019, then we had 21,000. We would apply that 4,000. So we got $17,000 of income for 2019. Is that okay? Now, Xavier Corporation was formed in 2017 and earned $50,000 that year. And it's easier if you write all this stuff down, by the way, than trying to keep it in your head. Okay, so 2017, 50,000. $5,000 in 2018. And again in 2019. In 2020, they had an NOL of 75,000. They do not elect to waive the carryback period. So the first thing they're going to do is they're going to carry back to here, 50,000. So they've got NOL remaining of 25. And then we're going to take 5,000. 20. Then 5,000. 15. NOL would reduce the net income of 20 to 0. NOL carry forward of 15,000 for 2021 and beyond. Now, let's assume that they earned 16,000 in 2021. But the rules changed in 2021, and we can only take 80% of that NOL. You can't take 100% anymore, right? So it's limited to 80% of 2021 income. So we've got to take 80 times 80%. We've done the calculation here. 12,800. So can't go below 0 now. So NOL remaining. So 12,800. So we've got 2,200. $3,200. Oh, 16. What? Wait. All right, so their income is 16,000 in 2021. Carry forward is limited to 80% of 2021 taxable income, 12,800. Their 2021 income, this is wrong. They used the 16,000. They should be using the 15,000 that was remaining of the NOL. Does everybody see that? Yeah. So it actually, what's remaining, it is $2,200 NOL remaining for the next year. So, oh, no, I guess it says that. Xavier's, oh, I'm sorry, their taxable income, yeah. So their taxable income is $3,200, I'm sorry. I didn't read the whole way. So Xavier's taxable income is $3,200. They will have an NOL carry forward of $2,200 going forward. Okay, but again, it's still going to be based on 80% of their. It's going to be limited to 80% of their income. So it's just kind of a interesting observation. So under what circumstances would a corporation choose to forego the carryback for an NOL and elect to only carry the loss forward? So if they think that tax rates are going to be higher in the future, or they expect to earn more money in the future, it may make sense to carry it forward. So if they've got a crystal ball and they know what's going to happen, right? Now, about that time, it would have made sense because the corporate tax rates went down. Well, they didn't go down for everybody. Remember I said the lowest income tax rate for corporations was 15%, and now it's 21%. So there's some corporations where they actually had an increase. A lot of corporations where they had a decrease as well. But if you were a higher tax bracket, you may want to, go back when the tax rate was higher. You had more tax during that time, so it's more valuable. Okay. Questions?